Ever wondered how India, one of the world's fastest-growing economies, is shaping up for the future? Well, the latest interim economic outlook from the Organization for Economic Cooperation and Development, or the OECD, might just give us some answers. The OECD has recently raised India's growth outlook for the fiscal year 2024 to 2025 to 6.2%, up from the 6.1% estimated in its previous report in November. For the following fiscal year, 2025 to 2026, the OECD has maintained its growth forecast for India at 6.5%. This optimistic outlook is supported by high-frequency activity indicators which suggest a continuation of recent moderate growth. Business surveys are also painting a positive picture, pointing to stronger activity developments in the service sector compared to manufacturing. But what about inflation? After all, it's a crucial factor for any economy. The report indicates that in emerging market economies, inflation is projected to remain generally higher than in advanced economies, but with a gradual easing through fiscal year 2025. Key drivers of inflation in these economies have been tighter monetary policy and energy and food price cycles. In countries like Brazil, India, Indonesia, Mexico, and South Africa, inflation is projected to continue easing and converge on or towards central bank targets by the end of 2025. At a global level, the OECD projects gross domestic product growth to ease to 2.9% in 2024, down from 3.1% in 2023, before recovering to 3% in 2025 as financial conditions ease. In summary, India's economic growth is looking promising, with a projected increase in the fiscal year 2024 to 2025 and a steady growth forecast for the following year. Inflation is expected to gradually ease, aligning with central bank targets by the end of 2025. This paints an optimistic picture for India, an emerging market economy that continues to show resilience and adaptability in a fluctuating global economy.